Hello and welcome to the latest news update on Canary News.
Tesla, renowned for its innovative prowess in the electric vehicle sector, is on a mission to revolutionize the automotive manufacturing landscape once again. At the forefront of this endeavor is Tesla's ambitious plan to introduce a $25,000 electric car, aimed at warding off the competitive threat posed by more affordable Chinese counterparts. However, achieving this goal entails more than just unveiling a budget-friendly vehicle. It necessitates a fundamental reimagining of traditional manufacturing processes that have remained largely unchanged for over a century. The cornerstone of Tesla's manufacturing transformation is what the company terms the unboxed approach. Departing from the conventional linear assembly line model pioneered by Henry Ford, Tesla's method represents a paradigm shift in automotive manufacturing. Instead of the traditional sequential progression of car assembly, where vehicles move along a linear conveyor belt, Tesla's unboxed method involves simultaneous assembly of components in dedicated areas. These components are then integrated into the final product at the culmination of the assembly process. This innovative approach not only promises to streamline production but also significantly reduce manufacturing footprints by over 40%. The implications of Tesla's manufacturing overhaul extend beyond mere efficiency gains. By reimagining the assembly process as a modular and agile system akin to building with Lego bricks, Tesla aims to achieve substantial cost reductions. The company projects that successful implementation of the unboxed method could have production costs, a critical factor in realizing its vision of delivering a $25,000 electric car. Moreover, the streamlined nature of the new process is expected to expedite the establishment of future manufacturing plants, enabling Tesla to scale its production capacity more rapidly and at a lower expense. Despite the ambitious vision outlined by Tesla's CEO, Elon Musk, investors and industry observers remain hungry for more concrete details regarding the progress of the new manufacturing system. Musk's propensity for setting ambitious timelines, often accompanied by delays, adds a layer of skepticism among some analysts regarding the feasibility of Tesla's plans. Questions linger about the potential inefficiencies and risks associated with transitioning to a novel assembly process, underscoring the need for transparency and clarity from the company. Nonetheless, Tesla's bold foray into reimagining automotive manufacturing has garnered widespread attention and support. In an industry grappling with the imperative of producing affordable electric vehicles to stay competitive, Tesla's innovative approach could catalyze a paradigm shift with far-reaching implications. As traditional automakers endeavor to adapt and fend off the rising tide of Chinese EVs, Tesla's willingness to challenge the status quo positions it as a trailblazer in shaping the future of electric vehicle production.
Before we continue, please remember to smash the like button and subscribe to our channel.
Xiaomi is poised to face a critical juncture as it embarks on its foray into the electric vehicle market, with the unveiling of its inaugural electric sedan, the SU7 series. This move marks Xiaomi's ambitious $10 billion venture into China's burgeoning EV sector, currently dominated by heavyweights like Tesla and BYD. The SU7 is expected to enter a fiercely competitive segment, characterized by intense pricing competition, positioning Xiaomi for a challenging yet potentially lucrative endeavor. Billionaire co-founder Lei Jun views this venture as a pivotal test of Xiaomi's technological prowess and market penetration capabilities. The success of the SU7 will not only determine Xiaomi's standing in the EV market but also impact its stock performance, which has seen a notable 22% increase since February. While the EV business may initially weigh on Xiaomi's profitability, analysts anticipate a positive impact on its stock value during the early phase of volume shipments. Analysts project over 50,000 shipments in the first year following the launch of the SU7, reflecting optimistic market expectations. Xiaomi's stock surged up to 3% in anticipation of the sedan's launch ceremony, underscoring investor interest in the company's EV venture amidst a dynamic market landscape. However, Xiaomi enters the electrified car market amid projections of a slowdown in growth, with industry forecasts indicating a decline in sales growth from previous years. Market leader BYD aims for a modest 20% sales increase, while smaller players like Li Auto strive for incremental growth in a fiercely competitive market environment. Pricing estimates for Xiaomi's sedan range from 200,000 yuan to 300,000 yuan, with a speculated starting price of 266,000 yuan for the standard SU7 model. The competitive pricing segment presents a strategic opportunity for Xiaomi to capture market share and challenge established players. Initial orders and consumer feedback for the SU7 will be closely monitored by investors, who draw parallels with Huawei's successful foray into the EV market. However, Xiaomi's EV business model differs significantly and entails substantial upfront costs, posing challenges amidst a price-driven market landscape. Analysts project significant EV sales for Xiaomi in 2024, with estimated shipments of 65,000 units generating approximately 14 billion yuan in revenue. The unveiling of Xiaomi's first smart EV model is anticipated to trigger a revaluation of the company's strategic initiatives, offering insights into its future prospects and market positioning. Moving on to macroeconomic news, Federal Reserve Governor Christopher Waller expressed a cautious approach towards lowering interest rates, stressing the need for patience and citing recent economic data as a reason for delaying or reducing the number of rate cuts expected this year. Waller described recent inflation figures as disappointing and emphasized the importance of observing improved inflation data over the next few months before considering rate cuts. He highlighted the strength of the economy and robust job growth as additional factors supporting the Fed's decision to wait and gain confidence in the trajectory of inflation towards the 2% target. During his speech titled "There's Still No Rush" at the Economic Club of New York, Waller reiterated his view that it is appropriate to either reduce the overall number of rate cuts or postpone them further into the future in response to the recent economic indicators. The announcement led to a slip in Treasury yields in Asian trading, with the two-year yield, particularly sensitive to policy changes, rising by about 4 basis points. Waller's remarks echoed the sentiments expressed by Chair Jerome Powell, emphasizing the significance of the timing of any decision to lower borrowing costs. Waller stressed the need for patience and used the phrase "no rush" repeatedly in his remarks, signaling a cautious approach towards monetary policy adjustments. Investors are anticipating the first rate cut to potentially occur in June. While acknowledging the need for eventual rate reductions, Waller emphasized the importance of maintaining the current restrictive stance on rates to ensure inflation remains on a sustainable path towards the target. He highlighted the divided opinions among Fed officials, with some projecting fewer rate cuts for the year. Despite the optimistic outlook for economic growth and resilient labor market conditions, Waller emphasized the need for further progress on inflation before considering rate adjustments. He acknowledged the low risk associated with waiting longer to ease policy, given the strength and resilience of the U.S. economy. During the discussion following his prepared remarks, Waller indicated that the possibility of raising interest rates further is minimal, unless there is a significant change in the inflation outlook. The government is set to release data on the Fed's preferred inflation metric later this week, which will provide further insights into the central bank's decision-making process regarding monetary policy adjustments.
That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to like and share our videos. Also, please remember to subscribe to our channel. This will allow our videos to reach a wider audience. Thank you for watching.